over to you.
Thank you so much, MC. How's everybody doing? Good. I peeked through the door, and you guys just had an exercise, a bit of warm up. And we did ours as well. And so thank you so much for obviously staying through this second session. And a lot of the conversation here is about money, right? About capital. And we have some of the very, very active investors here, institutional VCs that represents their funds, with track record as well, looking to deploy. That's very important. Having dry powder nowadays, it's not easy, right? Running as a VC business. So today's topic, I've been very happy to be the moderator here. I've been in space in helping a lot of startups, facilitating, I think, between both sides of the table. Things have changed quite a lot, right? Especially for very seasoned operators out there. You have probably also seen the pre-COVID changes, and now, fast forward, I think we just passed the 5th year after pandemic. Looking hindsight, so much time we have lost, right? Or a new opportunity is created out of this space. So I think without further ado, I'd like the panelists to have a bit of a short introduction of themselves and their funds, particularly if there's any segment focus, the size of the fund, the stage of the fund. So things you really want to share and talk about yourself and the fund at the focus. So let's start with Kevin.
So as the intro, my name's Kevin. I'm the founder and managing partner of Indelible Ventures. We're a seed stage fund based here in Kuala Lumpur, but investing across Southeast Asia. We're generally one of the first checks into a company, relatively small check writer, generally between 100K to 250K is kind of where our sweet spot is. We like to be in early, generally post-revenue, so we haven't done much in the pre-product space. We're solely B2B, so we're not going to do anything in the consumer space, solely B2B, and key to our thesis is that there has to be an international expansion opportunity. I don't think that any of the single markets as a standalone is sufficient for venture scale. So by necessity, we're only looking for opportunities where we see that international expansion capability. But aside from that, just looking for good founders, people, process, and product is the way that we look at things.
Thanks, Kevin. Natalie?
Hi everyone, I'm Natalie, part of the investment team at TNB Aura. A little bit about TNB Aura, we are headquartered in Singapore. We have offices in Indonesia, Vietnam, and the Philippines. We are just ended our second fund, onto our third fund, and so definitely looking to actively deploy out of that. We are Series A to B fund, sector agnostic. So unlike Kevin, we do a little bit of B2B, we also do B2C, we do D2C. So you might know some of our consumer brands as well. I think in general for us, what we are looking for at Series A to B stage is usually a proven product market fit. I think we try to be a bit more thesis-led, so a lot of our investments relates to the industry research that we do, called sprints, and we'll look at successful models in China, India, and sort of see what can then take root within Southeast Asia as well. So yeah, happy to chat a little bit more about the fund, and a little bit more about what we'll look at later.
Thanks, Natalie. And just a caveat here, TNB Aura has nothing to do with the Naga National Berhad, right?
Nothing.
Okay, cool. Cool. Zhengyi.
Hi everyone, I'm Zhengyi from East Ventures. We have 2 offices in Singapore and in Jakarta. I would say we have about 1.5 billion AUM, and we are, I'll say, stage agnostic and sector agnostic. Our minimum check sizes range from about 250,000 upwards, and we are able to have the dry powder to invest about 5-10 mil checks from our growth stage fund as well. Similar to the previous 2 investors, we do invest in, I would say, regional businesses. I do agree that single market thesis usually is a little bit too small for the region, and the regional thesis to start. I think that's very important to us. Happy to speak to anyone that might be interested in reaching out. Especially for startups within Malaysia, I think the value proposition that we bring is really to open doors to the Indonesian market, and I think that's where East Ventures is very, very strong in terms of connecting companies with the respective business networks and also other investors within Indonesia. Yeah.
That's super important, right? I think Indonesia is really a very, very big market, and obviously still quite nascent. I think technology has a lot of potential there. Same goes to commerce, the whole thing about Apple, TikTok, and whatever, big opportunities there. So I'd like to, I think just now what we talked about, the chronological evolution of VC pre-pandemic and VC post-pandemic. I think amongst the crowd, I do see it's a mixture of SME and tech startups. I think in Malaysia, startup is a really small niche of a larger pie of a SME. But really want to, since it's Happy New Year, since it's the start of 2025, why not we take a bit of a retrospective look, for the past few years since the market has recorrected itself, everything is stabilized right now. What's your key takeaway for last year or the years past post-pandemic? Zhengyi, would you like to start in the whole VC scene? How maybe sometimes new LPs that is joining on board to be much more aggressive and much more accepting VC as an asset class. So what do you see in your fundraising strategy and also on the entrepreneur side? Do you see more entrepreneurs as an upping trend in more accepting to this VC investment as opposed to just private equity going IPO myself, right? Because it's still a relatively fresh notion for this part of the world, unlike in more mature ecosystem like in US and EU. Zhengyi, would you like to start?
No, it's quite a lot of questions to unpack.
Yeah.
Perhaps a few questions that I can give a quick sort of response to each of them. In terms of the landscape, pre-pandemic, we've been living with zero rates for a long time. And I would say 23, 24, where rates have increased drastically, cost of capital have increased drastically as well. And from an investor point of view, money or capital becomes a lot harder to come by, which means in a way the bar to invest gets higher as well. However, it's not, we don't swing from extremes like say in the past we are growth at all costs, just focus on growth, and now it becomes, profit at all costs, just focus on profits. I think there's always that sweet balance in between where it's about having sustainable growth where a company is, so now the lens that we take, it's about how do you run a sustainable business while maintaining growth as well. And that's what the LPs are also looking at. How do you build sustainable businesses that can expand potentially across the region? I think that's probably what a lot of the investors are looking at right now. In terms of startups, I would say that there's always a continuous flow of new entrepreneurs coming onto the market. And with every, if you can call it a pandemic or a hurdle, or it's almost like a change of time. So there's always opportunities to start a new business. There's always opportunities to come up with a new business model. If there's change, there is change of business model. So we actually did not see a drop in people coming to us for fundraise. In fact, 23, 24, we do see a lot of entrepreneurs approaching us for capital as well. So it's about assessing from a market point of view, from a business model point of view, how are you there to disrupt the market? How are you introducing new business models that can potentially scale up to be the next unicorn, to scale up across Southeast Asia? So that's something that we look at as well.
Got it. Natalie, is that what you are looking at as well? What's your 2024 take, Natalie?
Yeah, I think I echo a lot about what he said on fundraising. And I want to caveat by saying that it's not just a Southeast Asia problem, it is also a global problem. I think in 2023, funding towards private market fell by about 22%, if I'm not wrong, recent, some report that I read. And we also, as Asia dropped from like a peak of 2018, I think we dropped by maybe 80% in terms of funding towards private market. So it is tough from a global standpoint and a Southeast Asia standpoint. But I think, I guess in our fund, we are also actively fundraising. We are thankful that we are able to do like a first close late last year for our third fund. And that being said, some of the insights that we have from LPs, maybe to touch a little bit on that, is for new LPs, there is still interest in VC as an asset class in Southeast Asia, right? So as long as you have a strong investment strategy, there is still interest. I think that's like one of the key takeaways. Of course, as an investor, I speak to the LPs from a specific portfolio perspective as well as research perspective, but we do get a sense of that. And with existing LPs, continual transparency, as well as value creation for our portfolios, being more honest about conversations towards exits, also helped in the whole in our fundraising process. So I think that is like what I want to address on the fundraising part. It is tough, but I think there are still funding coming back. I think second part on entrepreneurs, I agree that there's no lack of startups that are coming. And generally, we see two kinds of entrepreneurs, right? I think the first is very focused. They are VC-led from day one. They have to consume certain capital intensity or R&D or tech cost, right? And then there's the second part where we see organic entrepreneurs. They grow very profitable business, but somehow they are also interested in funding to scale maybe 10x, right? I think we start to see that VC funding is slowly moving towards more of this organic entrepreneurs looking at profitability, right? And then thinking about scaling. And sometimes, personally, I think that the best opportunities are in those companies that don't really think that they need money, and I have to convince them to take some equity so that they can scale maybe 10x, 20x, in the next 5 years. So I think a little thoughts on like the fundraising side and also entrepreneurs, right? What we are starting to see. Not that VC-led entrepreneurs cannot raise. I think they can, as long as they have a strong focus also on business fundamentals and unit economics. So I think with the fundraising activity that is like lowering our fundraising activity comes a recalibration of startups that we are seeing in the market. Yeah.
Got it. Thank you, Natalie. Kevin?
Yeah, what to add coming in last on this conversation. So I gotta think of a new spin to put on things. So on the fundraising side for VCs, there's a number of things that are going on. Yes, it's hard all around, but there's a number of different silver linings that we do need to end up paying attention to. So before I get to it, I'll say part of the doom and gloom, where there was research that came out and said just a handful of firms raised basically 75% of the new capital. So we're basically having this bifurcation within the industry of these giant mega funds, and then you're going to end up having a lot of like the cottage industry, the way that it originally started. And they're really different asset classes from an investor standpoint as well. But then when you unpack a little bit further, the other silver lining, the silver lining that I'll end up getting to is when you start looking at the allocations of who's investing in it, you're starting to see more and more players that are actually allocating capital into venture capital funds. You're starting to see more high net worth individuals putting money into venture capital funds. You're starting to see more family offices putting money into venture capital funds. And you're starting to see more pension funds, endowments, et cetera, increasing their allocations. And so if you think about this giant pool of capital, you're talking trillions and trillions of dollars. And if you just increase that by, say, 1%, 2%, these nominal percent changes in the allocation that these pools of capital are doing is going to end up having a massive impact over time. Now, I'll flip back to a negative thing just because I like to go back and forth on positive and negative. The negative side is that when you look at Southeast Asia as a region, it's been burned a little bit, to be honest with you, because one of the main complaints when you start talking to LPs that are in Southeast Asia is the lack of distributions. And so there was a research report that came out not too long ago, and it did the benchmarking comparing Southeast Asia versus China versus US, same vintage, same number of years of operation, and said, okay, what are the cash-on-cash returns that have actually come out of it? Now, we need to contextualize this and note that for most funds, it takes a very long time for the full cash to come out, because we have this saying, the lemons ripen fast, your losers will die, the ones that are still alive, you want to hold on for dear life because they're growing so fast, why you'd be crazy to sell it. But nonetheless, when you look at the Southeast Asia, it was like 4%. That's not a 4% return on your capital. It's 4% of the money that you invested has come back to you. So if I invested $1 million, I've only gotten 40,000 back so far. So you're sitting there saying, I look pretty good on paper, but where's my actual cash in the bank, right? So you have a lot of people that are a little bit frustrated off of this. They're waiting for some of these distributions to come back. So you're basically trying to have to open up new allocations. So you have a whole lot of this sort of like wait and see sort of crowd. So we've got some challenges associated with that market. On the startup side, I think different markets are reacting in different ways. I think when you think about the markets that had gone through a few cycles, they're in a little bit better condition. So if you think about like a Singapore, to be honest with you, is kind of like manufacturer conditions. It's very consistent. Like the rules, everything is like bop, 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 bop. It's like, it has that magnet. It's like capital of the region. It has that draw, it has that consistency. It just hits like that. Indonesia's down, but Indonesia is still consistently producing a pretty high volume. A lot of that is like lower deployments. There's a higher consideration in regards to what the selective criteria is. I think when you look across the board, it's not, as the region is not homogeneous, the reactions in the post-crisis time period is not homogeneous. I do think, I won't go into all of the detail, but I do think that Malaysia needs to start catching up. So I really hope that some of the entrepreneurs get their head down to the grindstone and start cranking out some great companies, because we haven't rebounded as fast as we should, and hopefully we can do a little catch up because others are moving ahead.
Thank you so much for, giving a little bit of perspective of how, I think from a global perspective, the asset class level, and in same touching also on the pressure comes not just on the VC side, it's also working very closely with the businesses that took the money, right? And obviously generating cash is not easy. We've been through some tough cycles. And I want to talk about something that, would win everybody back their cash, exits, right? And we have not been, even though we did mint some unicorns, a lot of them are talking about, hey, they're zombies, right? So this is a big topic to talk about. And obviously, I think from managing other business money, that is worrisome, right? And from the operator side, you guys are hungry for cash. So if when everybody's hungry for cash, on the GP side, at least to give the operator a bit of a chance to actually empathize on the GP, right? From the VC side, how are you guys rethinking of your exit strategy when the time comes? And obviously, Kevin, you touched about the fund life, right? Even with the extension of 1+1, it may prove not enough for this region, right? Then how, right? Are you guys looking into more innovative strategy, having more honest conversation, not just with the LP, but also with the founders that, hey, time's up, right? How are you going to engineer this exit? So do share us a bit of what you guys are thinking, and hopefully for the crowd, you guys can be mentally more prepared, operationally more prepared for it. As a founder, VC, you make money together with your investor as well. So yeah, Zhengyi, would you like to kickstart this conversation, since you do cover a bit of a growth stage company, and obviously that is a big conversation that you kind of want to have with your investee.
Yeah, it's talking about exits in Southeast Asia is never a simple or easy way to.
Sorry to put you on the spot.
And coming from the growth, sort of like a later stage venture capital, exits, it's always part of, on the investor's mind. Yep. We think about 5-year, 7-year timeline. And given the pandemic, which did put a pause on a lot of the exit plans, and added with the rate hikes, which further pushed back quite a bit of the exit plans. So now, I think most, I would say, later stage investors are thinking about how do we engineer or how do we expedite some of these exits. I would say 2025 is going to be a year of exit strategy. So investors are thinking about how do we push our portfolio companies to get themselves ready. So at least for us, with a lot of our portfolio companies, the more mature ones, we are working very actively with them to formulate a strategy and get the companies ready so that when the time is right, they can get themselves for the more traditional, if you can call it IPO exits. Those takes about 1.5 to 2 years, or maybe even more, because it involves hiring of the right people, involves getting them internal systems ready for all the financial reporting.
Yeah.
It involves getting the bankers, the lawyers, all the service providers, doing the roadshows, making the markets. Many steps there that goes into prepare themselves for IPO exit as one. But some of the other ones also is, we do talk about founders to open themselves up, say, what can be a potential sale mean for you, right? Selling to strategic investors or selling it to private equity investors as well. There are multiple exit paths, but ultimately it's the founder that makes the decision, or the key shareholders coming together in a democratic kind of way. So that is something that we also talk to our founders on. I think right now one very interesting, I'm not sure how many of you have heard about it, but one very interesting thing that's happening, it's Indian market is extremely hot right now. Companies list in India at crazy multiples. One of the things that's happening is roll-up plays or valuation arbitrage play that is happening with listed Indian companies, where they're able to sell to a strategic investor, say at 5x or even 10x revenue multiples, but the pricing in India is maybe at 15 or 20x. So there are a lot of investors or companies in India that are willing to buy up assets across the world within Southeast Asia at almost discounts as compared to a domestic valuation. So there's a potential avenue that I'm sure many investors are going to explore. Continuation funds have been happening for, I would say, the past couple of years. Many funds have raised continuation funds. It's almost like if you can call it a reset on the timeline of their funds, so that the funds can continue to work with the companies. It takes the pressure off, the time pressure off, so that they can continue to work with the companies to get them ready for exits. That's another thing that's been what I'm seeing. Quite a few funds actually, even some of the larger ones, say like Alcat has done a continuation fund as well on some of the Asian portfolios. Yeah, so we're going to see more of that as well. Yeah. Another one, perhaps less relevant to the companies, but more relevant to the GPs, are secondaries. So secondaries, what that means is the money goes to buy the shares of investors, so that the money don't technically go to the founders, but that is really heating up in the past 2 to 3 years within the region. Global or big secondary funds are coming to Southeast Asia and sort of like rejuvenating or some resetting some of the timeline, and that gives investor an avenue to sort of exit some of the shareholdings as well, so that it can pass the capital or pass some of the cash back to the LPs. Yeah.
Cool. Natalie?
Yeah, I think I agree. It's having conversations, right? So conversations with LPs, but before we have conversations with LPs, we need to have conversations internally, and then we need to have more conversations with the companies. So I think in the second half of 2024, the team have started a lot of conversations and strategizing. So I think maybe as the founders, when you can have honest conversations about how you think about exit from day one, I think that is like a good tip, and it's always something that I think is a green flag. I think maybe in the past when we were in more capital days, like we had more capital, that conversation can live to later because we can always fundraise. But now I think when I enter into a conversation with startups, I think about what is your runway, how much is it going to last you, what is your next milestone, and then how are you thinking about exit? Is it an M&A and is it IPO? And if you are doing well, then potentially I let you grow, maybe I do a secondary, right? So there are different types of exit options. So I think that's one. As a founder, have conversations. Even as VCs, we are actively having these conversations from day one, and with my portfolio companies as well. I think second thing is when we think about exits in Southeast Asia, and one of the main exits is of course IPOs. I'll be honest to say that I don't think our IPO market is as ripe as the developed markets. But I think me and my team, I think we are hopeful that IPO market will take off as long as you have strong business models and fundamentals, right? With every market that sees successful businesses, you will eventually have a strong IPO market. And I know that a lot of VCs in Singapore are in active conversations with MES to engage them and talk about how can we help develop our startups into a IPO route. So I think that's the first thing on exits and IPO exits. And in the meantime, then we think about M&As, right? So I echo what Is said earlier about India market looking actively to potentially coming into Southeast Asia, them acquiring maybe a similar business in Southeast Asia. And with M&A is actually a good exit because oftentimes it's a clean buyout, right, for VCs as compared to IPO where there's sort of a waiting period. So I think those are some thoughts on exits.
Thank you for that. And Kevin, we mentioned a little bit about, because you're early stage, right? And the trend is obviously, I think founders, experienced operators also start to raise less rounds. They're going to raise 1 or 2 rounds, then get an exit. So Kevin, could you share a bit?
So I have, let's call it a nascent thesis, because I'm still just kind of curious how it's going to shape up. So it basically says that now with AI tooling, that we can essentially consolidate roles. What used to maybe take 4 or 5 people can now be done with 1. We're going to eliminate a lot of roles because of automation, and we're going to end up having a big change that's going on. We already see it with a lot of our portfolio companies and a lot of the startups where I see where, your 10x dev is now 100x dev. He's doing, these people are doing crazy amounts of cool stuff. Now, if that's the case and you think, what's one of the main costs of a startup? It's headcount. Now, if we start subtracting out that necessity of capital demand on headcount, what does it mean for the capital requirements in order to fund that business, in order to get them to scale, in order to get them to a point where they're growing? So I'm starting to wonder what's going to happen to the middle layers of the capital stack. Actually, it's kind of where you guys are positioned at. I'm wondering what's going to be the change in that in regards to, are companies going to basically need to raise to get off the ground, raise to get that initial inertia, and then you can basically leverage the tooling to get scale, to drive faster growth at a cash positive basis, and it's a bootstrapper enabler. And then the question ends up coming down. I mean, this is not going to be broadly applicable across all, but I do kind of wonder whether or not we're going to see a contraction in the capital requirements in the middle of the stock, and whether or not that's going to cause a change. I do wonder, because if we look at history, there's been moments where capital is used as a weapon in competition. I mean, look at ride hailing, look at food delivery, look at a number of different industries where it was just like, raise $1 billion, throw $1 billion, raise $1 billion, throw $1 billion. And maybe that could come back around. It's hard to say. All of the tech is moving very fast right now. That's why I say that it's kind of a nascent thesis. I'm just kind of wondering what's going to end up happening to it, because it also impacts as an early stage. How am I supposed to help gear these companies to be ready for their next steps? How is it, typically a VC is going to show on their financial reports and their performance when a next fundraise happens, I mark up the valuation. Are my books going to be at 0 for forever? That's what I'm also wondering. Am I going to have to change my own policy in regards to my own books of what I show people? All of a sudden, 5 years in, and I'm 0% return. Well, it's because I haven't marked anything up. So there's a number of question marks in regards to what is going to end up happening to the capital stack, what's going to be the impact there. But the exit side, just to circle back to that point, we have to gear people up from day one as well. It's a very long timeline between when we come in and when an exit's going to happen. There's data from Sapphire Partners, which is a big LP out of the US. They're also a VC. That was saying their early stage funds are more like 15. Even though they sign up for a 10 plus 1 plus 1, which is 12 years, it's actually averages more at 15. That's kind of crazy. So it's a long term.
Yeah. Thanks for that perspective. Because I think it affects a lot on how founders, especially as we build ventures, sometimes we think a bit too short term, right? I think as a founder, we play the venture back game, or you guys have any interest in this conversation, you usually look for 5 years, I'm going to retire. That's usually the average was set before COVID. Right now, I think VCs, right, it's a trickling down effect. I think the market is correcting itself. There's a lot of thinking founders have to do as well before jumping even to a conversation with the VCs, whether you're early stage, whether you're growth stage, and in planning, how do you make money for everybody on your cap table, right? I think obviously we talked a little bit about pipelines just now. I think it feels like it is now a broader interpretation of who can be VC backed. And there's also different, I think, organic entrepreneurs who didn't think they are VC backable, or VC as a growth capital option can be actually part of the conversation. Like we have seen D2C companies, retail commerce companies, brick and mortar companies, slightly there's an asset aspect to the business is being backed, not fully tagged. So there is, I think, not as gloomy, I think, coming out from the period. And right now, I really want to point towards moonshots, right? Innovation is not something Asians are good at, right? We are very risk adverse. So much so, innovation that's really bottom at the priority in a lot of, in education, in the way how society works, and also how corporate wants to innovate. So then the question, I just want to bounce it to, comparing from, I think, because Kevin comes from a very different cultural background, different market, and we also have like 2 panelists here from Singapore, right? One of the most innovative economy in Southeast Asia. And to draw reference back to Malaysia a bit, because I think most of the crowd come from Malaysia, and how would the LP and you guys are also doing a little bit of a maneuvering, a bit of an education in elevating some of the LPs are they, especially when they come from this region, are they also open up to moonshots, right? Yeah, so what's your take? What's your sentiment? Is there a trending upwards in terms of, I think once a while, out of the 10 you invested, maybe 1 or 2, you can go crazy with our money. Is there a silver lining on that? Maybe, Kevin, you want to start it first? Yeah.
Sure. I gotta tread lightly here because talking about our Asian suited for innovation as the white guy on stage, it's kind of like, all right, way to get me canceled. No, but like, what I would say is that when you think about most of the investors that are putting money into VC funds, they're mostly conservative. Most of their strategy is around wealth preservation, so they're oftentimes much more risk averse. When you think about that, it oftentimes comes down to generational as well, because if you're first generation and you're the one that's making it, you're a little bit more risk accepting because you're in that accumulation stage. But when you start getting into like second, third, fourth, fifth, you just don't want to be the one that messes it up, especially if you're the third generation, because there's the moniker of like the third generation is the one that normally does it. So they're oftentimes risk averse, which ends up meaning that there's not as much of a comfort level with moonshots. And in all honesty, because we're super early stage, there's not a lot of comfort with where the stage of the pipeline where we're at. Even if it's not like a moonshot sort of crazy idea, it's generally more of like, oh, I really like pre-IPO because it looks like a public market company. I can analyze it, I can understand it. But when you give me like an idea of and a little bit of traction, it's very hard to kind of wrap the arms around. So there's less of a comfort level with that stage, at least from like a formal institutionalized sort of approach. We have plenty of folks that are like willing to dole out what for some of the wealthier parts is more like pocket change for them, which is meaningful amounts for small funds, but nonetheless, so you can find some of that, but there is a level of conservatism that prefers later stage companies, and it also is not as keen on, catching a rocket with the chopsticks, like. if somebody went to an investor here and said, "Oh man, I got this great idea. We're going to reuse rockets and we're going to catch them when they come back down." Yep. Maybe you get a couple, but you know, am I wrong?
Yeah, Natalie.
I think I'll start off by saying that in Series A to B, I mentioned earlier also that we generally look at something that has taken a bit more ground, something that has product market fit. But I think when I think about pipeline of maybe moonshot or maybe R&D intensive or tech intensive type of companies coming out, I do think the macroeconomics environment helps to attract certain talent into particularly Singapore with the tax environment, with what's happening in the US and China, right? So you do see, I think talent coming to Singapore, and they have taken, and they have raised here, and they have also successfully expanded globally. Right, so some cybersecurity companies coming out of Singapore, founded by maybe a tech guy from Silicon, you know, that has taken root. I think second part is also we are starting to see homegrown as well, right? Because we are having more tech talent within the region, right? So whether it's nearby, in Dubai, in the Middle East, there are increasingly more tech talent available for this part of the world to develop something that is a bit more innovative and tech intensive, but also you see Vietnam developing quite a good capability in that. So I will say, yes, there is still, I think, conservative, like, in general VCs, but there are companies coming out that are becoming more innovative. Then where do they get their funding, right? So they get their funding from companies with specific mandates, right? So you have sovereign wealth funds, specific mandates that dedicate towards deep tech, right? There are still funding there, quite a bit of funding, right, from them. And then you have global funds that you can tap into as well. So yeah, I think, but within the region, I think there is still a bit of conservativeness towards deploying, but there is funding, and I don't want to sort of burst the bubble, right? We should be more innovative as well as a region, yeah.
Yeah, Zhengyi, you just know we chat a little bit of your career before being a VC. I think Malaysia has been referencing Singapore quite a lot, I think, especially the innovation piece, right? I think, so this innovation piece, I think Kevin also were very active in this part of the conversation, which is very healthy to draw comparison, to, I think, challenge a bit of the, I think the conservatism of the Malaysian governments and what sort. So there's a lot of things to learn. And so moving from, I think, your career history, being also very highly facilitated by the government in encouraging Western multinational corporates to work very closely with the digital transformation of the enterprise, the local enterprise. Because what I realized at a couple of trips to Singapore, actually local enterprise in Singapore think very, very similarly to local enterprises in Malaysia as well. Very conservative, very pragmatic. Yeah, why do we want to change? Why do we want to buy this very expensive bookkeeping, whatever software, right? I'm an SME, right? So this is something I think Malaysian overall very envy of that. And so this is me trying to give you a bit of context. There's no very challenging question. It's just that I want to draw a bit of attention to Jelawang Capital, right? We talk about very concentrated few GPs are in the Malaysian market, especially in the Malaysian market. And I think with Khazanah's acquisition of MAVCAP, Jelawang seems to be a silver lining to giving more opportunities to new emerging fund managers to operate in Malaysia. Of course, also helping Malaysia to draw some FDI in. It feels like Jelawang is much more innovative and open, but I'm not too sure, Zhengyi, and what do you see in also seeing that your portfolio is scattered around the region, and Malaysia, seems like having some conversation, you want Malaysia to be also one of the key focus, and hopefully you get some deals out of Malaysia. And comparing with the past deals you have made, some experience, what is your take on, is the trend of Malaysia being much more innovative a factor of the ecosystem success or not? It doesn't matter at the GP level. Yeah.
Let me try to unpack some of this. So first things first, I do think government's participation in building a favorable ecosystem definitely helps. The setting up or the allocating of capital either directly to startups or directly to GPs or even in general to the sector as a whole, it's all good news. It shows, at least to a certain level, the commitment from the government to try to sort of solve the problem or to grow the sector. So the news on Jelawang Capital, at least from our end, is positive news. Not just local GPs having a chance, to start a new fund or to raise their second, to raise their third funds. Investors from outside, when we see it as a positive development where there's that seed or there's that initial capital to start to grow this ecosystem, to try to expedite the organic growth. And for us, we are more than happy to look at, say, companies that have gotten their first check from local GPs. And then from us, we'll come in and say, hey, our next check will be to help you to grow to the region. We want to open up doors to Singapore. We want to open up doors to Indonesia. And in a way, everyone benefits. So I think it's very, very positive news in the development of the funding side. I would say, like what you mentioned, Singapore government's work around driving innovation / increasing productivity or introducing digitization across SMEs or local enterprises alike. Singapore has done that work for about, I think, 25 years, which is, it takes time, and it takes, I would say, a very concerted effort, not just from the digitization agency, but also from each of the sector champion agencies, the one that manages, say, transportation, the one that manages environment, the one that manages food. All of them needs to come together with the sort of like a concerted thesis in order to digitize across the different agencies. And I'm sure Malaysia it's in the right direction. And I'm really hoping to see how this develops over the next couple of years, and I'm sure we will make leaps and bounds here as well.
Yeah, thanks for that. And Natalie and Kevin, what's your take on Jelawang?
Yeah, I think I echo that it is extremely positive for the Malaysian ecosystem. I think not just for local GPs, but also for regional GPs, right? I think like for TNB Aura as well, Jelawang Capital was part of our first close. And I think it also motivates us, as what you said, attract FDIs from their investments into Malaysia. I think another part is also that it attracts startups who are around Malaysia to also expand into Malaysia as a form of maybe potentially getting some capital from Malaysian GPs, right? So that also grows the economy from an indirect perspective. Yeah, so I think these two, it is very positive.
Okay. So I said before coming out here, I don't want to get deported, but I'm going to go ahead and make a couple of comments. So it could be positive, but we've seen this story before. It's not the first time. And so the question is this time different? At the present moment, the optics are basically the same. So the question still comes down to, is this time really different? If you look at the last iteration, fund to fund, can't really say that it's made much of an impact.
Yep.
If you look at the last iteration before that, can you say that the ecosystem is better these many years forward? Cannot. So the question still comes down to, good intentions need to be executed well in order to actually reap the benefits. So there's still a question mark in regards to whether or not that's going to end up being the case. It's good to have optimism, but when you've heard the story before, you do have to wonder whether or not this version is going to be different.
Yep. Good point.
And I don't want to get deported again.
No. Yeah, we definitely don't want to, because we need the GPs, right, hanging around in Malaysia. And to your point, right, what would be, I think we are closing towards the very end of our conversation. So what would be maybe for Kevin, what is your wish list for Malaysia? I think Malaysia has been trying very hard in producing great startups, right? Making it a powerhouse. I think Cradle or the Malaysia Ministry of Economy have said, the goal is to be the top 3, right? The top 5, top 10 startup ecosystem in the world. And what do you think, those some of the necessary conditions, to your point, the execution part needs to nail it in order to see a better version of an ecosystem? Kevin, from your side.
Well, I mean, I think if you think about big, hairy, audacious goals, saying that you're going to be that globally is definitely that. I think, just to put a frame of context, when I came out here, I was telling you this before, when I first came out into the region, I could probably say that Malaysia was probably number 2 in the region because it was before the Indo boom. And so I could probably say that relatively easily that Malaysia was pretty happening at that point in time. I can't really say it anymore. And it's not that it just fell from 2 to number 3. I think it's fallen much further from that. And so there's a lot of ground to be made up. I think that one of the things that makes me frustrated as a regular contributor in the startup ecosystem here is that we're basically repeating the same playbook with a new slogan, and it hasn't worked, and it needs to change. There needs to be more initiatives, or just eliminate them entirely, because if they're not working, why keep on with the same old? So my wish list would either be completely change and re-strategize, or just get rid of it in the first place. One of the two, because if it's the poorly executed, can end up having counter-effective impact. And I do believe that is something that has been felt in the ecosystem, because I'm a strong believer that Malaysia is actually, especially in the B2B space, it is probably the best place to start your B2B company. It's lower cost than Singapore. Singapore's fantastic when you mature into it, but when you're starting, you want the low cost infrastructure. Fantastic. Global connections, infrastructure, I can go on, you have access to talent. The visa program isn't always easy, but it's sufficient enough in order to bring things in. There's all of these enabling characteristics. The question is what? What is that other side of it? And I think I'm a little bit controversial in my opinion in regards to where that focus ends up going. But that needs to change, because that, in my opinion, if all the enabling characteristics are there, and if you say that it's an extremely entrepreneurial people, then what else is there? So my wish list is just those 2 things. Completely re-strategize or get out of the way.
That's it.
I think for me, I'll speak to the entrepreneurs, right? Because I think with good entrepreneurs, then that ecosystem, it starts with you. I think that's what. And I spoke about 2 different kinds of entrepreneurs, right? The VC-led and the organic. Spoken to both, many of these 2 types in Malaysia. I think the VC-led needs to be a lot more forward thinking, right? We think about exits, we talk about capital burn, we talk about path to profitability, good unit economics. That has to start from day one. And then for the organic entrepreneurs who run great businesses, profitable, there needs to be some form of audacious ambition, right? Spoke to a founder running a great business, and he says, 2x this and I'm out. And I'm like, why not 10x this? And then we go out together. So I think that audacious ambition can be cultivated though, so within that venture capital ecosystem. Yeah.
Thanks, Natalie. Zhengyi?
Perhaps from a policy point of view, I'm not as well versed as Kevin, so I can't comment too deeply on that. Perhaps for me, the more basic view is both ecosystem player and supply side, i.e. the entrepreneurs, sort of they go hand in hand. So to develop really a good ecosystem or a flashy ecosystems, one is the founders and entrepreneurs. Just be ambitious, go out and try to achieve, your dreams. Go for it. And I would say, in a way, the funding side, with or without favorable policies or not, I think money do flow or capital do flow to, aggressive, ambitious, and quality founders. So they will find a way to go there. Just to throw out, for example, say, I've been doing deals in Vietnam, and it's probably logistically, bureaucratically speaking, one of the most difficult processes that I've went through, but capital still wants to get in because the market is big, because the founders are ambitious. Yeah.
I love that. Capital will come to you if you are aggressive enough, you know your stuff, right? And that's why it's called venture capital, right? And just one last bonus question, right? Nothing to do with our conversation, but it has a lot to do with AI, right? Asking on behalf of the startups over here, would a founder get a higher chance to talk to you guys if I have an AI label in my startup solution? Yes or no? Or
There's a high chance that I may roll my eyes. If you're going to put AI in your pitch deck, or you're going to say AI in your name, you better be able to back it up. Because it's the same thing with blockchain. Everybody was like, but we're doing it on the blockchain. If you're going to put AI, back it up.
cool.
I think it doesn't matter to me. It's about whether you have the right product for the right market. I think AI is a revolutionary technology. It's important and significant globally, but how it's applied in Southeast Asia, I think it has to be very specific use case, and that it might potentially work if you overcome a bunch of laundry list challenges. So you must be aware of that as a startup. But he brought up blockchain. So if you plus AI and blockchain, then, I think you speak to Kevin.
I think there are different ways of approaches. I may be on Kevin's camp on this. So if the deck is a buzzword capital, if the pitch is buzzword capital, then to me it shows that you can't go that one level deeper. So instead of telling me AI, tell me what you actually do that classifies you under AI. So if you're using, say,